This is the CMC Markets Connect Volatility Report. Shares in some Chinese e-commerce giants were in a skittish mood yesterday after state media reported an individual surnamed Ma had been detained. The downside for the underlying price in Alibaba was as much as 10% at one point, and although later clarification from the press that this wasn't Jack Ma resulted in the stock recovering most of its losses, price action was somewhat elevated. Daily vol on Alibaba hit 324% against 143% on the month. The Swedish equity index remained active after Monday's flash crash, with volatility still looking elevated as the underlying recovered a little. This left daily vol on the local market at 90%, down a fraction from the 124% posted at the start of the week, but still well ahead of the monthly print of 44%. Soft commodities are still showing elevated signs of volatility, with OJ futures topping the board for a second consecutive day. Prices here remain below the mid-April highs, but the uptrend looks to be intact once again. There are those concerns over poor crops, rising labour costs, and the underlying fact that prices are set to continue rising for some time yet. As we've seen in the asset class before, however, the market does risk becoming overheated, resulting in sharp pullbacks, so action could remain high for some time yet. Daily vol came in at 156% against 117% on the month. In a good illustration of those pullbacks, lean hog prices slipped back to lows not seen since the start of the year as demand from China was seen as falling, with domestic production on the up, whilst the risk of product becoming too expensive for the US market was also seen as a factor. Daily vol sat at 107% against 68% for the month. Finally, rounding off with fiat currencies, the Aussie dollar was in focus yesterday after a surprise 0.35% rate hike by the RBA. The bigger than expected jump had a consequent impact on price action, driving daily vol on Aussie dollar to 18.68% against 11.42% on the month.